Ethereum Classic currently sits at about $64 per coin, and I really do want to look at the news that is going on today with crypto markets, because it is not just Ethereum. Every single crypto is selling off much the same way as Ethereum is, about 15% across the board. And I do want to go over why Ethereum Classic can and will hit $1,000 per coin. Now, if this will be in 1 year or 10 years, that is really the question here. But just take Doge for an example. At the height, they had a $90 billion market cap, and it might have went even higher than that to about $100 billion market cap. At the same time this was happening, Ethereum Classic only had a $9 to $10 billion market cap. That is a 10x difference. Ethereum Classic was at $100 per coin, so that would put them, as far as the same valuation as Dogecoin, at $1,000 per coin. Now, that had a lot of hype built into Dogecoin, and obviously we could all argue that that is probably not a justifiable valuation for Dogecoin, but I do think going into the future, crypto as a whole will become more widely adopted. So I think the two biggest questions here is, how long is this going to take to get to $1,000 per coin? And obviously nobody has a crystal ball, and you can't really accurately forecast that. Really just depends on adoption and usage of cryptocurrencies as a whole going up over time, and I do think that is going to be the case. And if you're going to average down in your position and keep your diamond hands, that is the only thing that matters right now. If you are down in your position, if you sell out, that is a realized loss. If you are just down in your position, that is a unrealized loss. So technically you did not lose any money until you do sell. Do me a couple quick favors before we do get into it. Tap, tickle, touch, or smash the like button, but make it turn blue for me, as well as subscribe to the channel if you are not already. And I also do have a Patreon link down below if you guys want to show your support in that way. There's my buy and sell alerts, as well as one-on-one Q&A for any investment questions you guys have 24 hours a day. That is available down below, as well as a link to Public. You could sign up. It takes 2 minutes, maybe less than 2 minutes. No need to link your bank account to get $5 worth of a free stock in your choosing. I got $5 worth of Tesla, and it's a no-brainer. Why not do it? And I do like one thing more about Public than other companies. You can essentially link your debit card instead of doing a micro transaction from, Robinhood or Webull to link your bank account. You can just use your debit card. So it's a lot easier to actually start investing on Public, and I do recommend you guys get your $5 free in whatever stock you so choose. But with that, let's get into it. First things first, let's take a look at what is really beating down the crypto markets yet again today, and it is, you guessed it, more China news. And I shouldn't even call it news, because it is really reiterated information that we have all known about for years and years now. But it is taking a toll on the crypto markets today, and China did come out and they said, in quotes, "We should crack down on Bitcoin mining and trading activities and prevent individual risks from being passed to the whole society." And yet again, this is something we have known for quite a while, but like I've said in previous videos, it is not illegal to mine Bitcoin or other cryptos in China, but you cannot, as a bank or a financial institution, transactions with Bitcoin or any other cryptocurrency. That is the part that has been banned, but you can mine cryptos. So if this is yet to be actually enforced, that is still yet to be known, but if it does, it could definitely have an impact on the validation system behind Bitcoin. Also, this week, swings have led to huge liquidations by leveraged investors and damaged the narrative that cryptocurrencies will become more stable as the sector matures. Musk's actions showed just how a few tweets can still upend the entire market, but even more so, the past few days have renewed the regulatory threat of the crypto market. David Tawil, president of ProChain Capital, he said, in quote, "You must always proceed cautionally with China, never get too bullish or bearish. We'll have to see what the regulation brings. It's one thing to say, it's another to do." So I think this whole sell-off in crypto is really coming down to investor confidence. Now, we have ran up a lot in cryptocurrencies, so we were already due for a pullback, but now you get these regulation threats that I do think is the biggest threat overall to crypto, not from China, but from America, and we don't look like we are taking that stance to crypto. Doesn't look like we're going to be regulating it anytime soon, just you'll have to pay taxes on it, right? So if you're not doing illegal activity, that's all good, you have nothing to worry about, but it's just a simple case of lack of investor confidence. People don't want to put their money into cryptos, or they want to take gains out faster than they normally would have, just because of what could happen with China and other countries. Because it's not just China, but China is one of the bigger countries that actually mines and does a lot of business with cryptocurrencies. So I do think the sell-off is overblown, but it was definitely due for a slight pullback, maybe 10 to 30%, but definitely not 50 to 60% as we have seen in most cryptocurrencies. Taking a look at specifically what happened with Ethereum Classic today, I guess the chart does, give the whole outlining details of this, but early hours last night, we were in between the range that I had pointed out, just under the $77 mark, which is a key level to break and then form a support level. But at about 10 a.m., once this news did break, we started falling, and we fell about $10, $9 from about $74 to $65 in the matter of about 20 minutes. And then we just continued to slowly sell off throughout the day, hitting a low down to $56.94, down 24.5%. Now we're currently sitting at almost $65 per coin, so a slight recovery, but we are still far from our early morning highs at about $75, $76. So the overall picture, I do still think it looks good for ETC and other cryptos, even though we could continue to sell off even more considering how much we have rallied in these other cryptos. But right now is specifically important. If you are going to have diamond hands, you have to have diamond hands when it is selling off, not when it is rallying up. It's easy to feel good about your investment when it's going up in price, and it's harder to do that when it is going down in price. It'll make you question everything that you knew before it started selling off, and where in reality nothing has actually changed, and this is all old news. So my position does still the same, still $103 average cost, 26.10 coins at 6.33% of my portfolio, down 36.5% or $983. Not concerned about it at all. I know what I'm investing in, and ETC is the best altcoin you could buy right now, or it is closely ranked as the best altcoin you could buy right now. I know a lot of other altcoins have their own specific purposes, but Ethereum Classic is the first Ethereum. So, you could program something the same on regular Ethereum as you could on Ethereum Classic, but they have less miners, so it's not as safe, it's not as updated, but that could all change relatively fast. The higher Ethereum goes, the higher Ethereum Classic should go, and that really does go for the whole crypto market itself. And I do compare it a lot to real estate. If you have a smaller house in a nice area that is those houses around you are highly valued or much highly valued than your house will be worth more just because it is in that desirable location built around nicer houses. Obviously not the same price, but it'll be highly elevated compared to that house in a bad area. So hopefully that made some sense to you guys and maybe gives you some confidence going into the future. Now let's take a look at the technical analysis and what is going on a technical chart. This technical analysis is the same from the last technical analysis, and we still do have our lower end support at $45.70 per coin, and that is where I do think our low or our bottom will be if we do continue to sell off. That's really where we will consolidate around, and I do think that is highly unlikely, probably less than a 5% chance we actually go down there and consolidate there for an extended period. I'm talking 1 to 2 months, so I think it's about a 5% or less chance that actually happens. I do think if some of these regulation news do subside and they're not coming out every single day, that we will go back to about the $77 mark and consolidate around there, and then push up higher to about the $88 mark is where we'll get our next little set of resistance. But I do think we'll blow past that and really consolidate around the $100 mark. That does not change, and that puts us at exactly our 200-day moving average, which is almost there at $99.47. So we're in a strong bearish downtrend right now. You can see 50-day moving average currently sitting at $74.49. So if we can break above that, our odds of going to 85, 90, 95, 100 is a lot better once we do break the 50-day moving average. Now, as far as what I had marked last night in the last video, taking the bottoms of our lows and just drawing it on a trend line, it did signal that we were going higher. But since this news that is outside of our control came out, we did dip under this. Now we're starting to recover a little bit. Like I said, sitting at about $65 on Robinhood, $63 on the Webull, starting to trend back up. So this I do think this trend line would have been very accurate if we would have not gotten this additional news. And it's not even really news. Like I said, it's reiterated information. But I do expect to pop back up over the $77 mark and then get some real resistance around 115. That's where we sold off, and we have not seen that pretty ever since, essentially. On the RSI though, we are, even after this sell-off, down 14.32%. We are not in oversold territory. We're actually starting to curl back up, which does indicate that we are getting some positive sentiment, or at least the price action is starting to look positive from the bottom that we did see today. And on the MACD, the signal line is above the CCC line, so that is obviously a bearish downtrend as well, signaling that. And this could change at any moment. We don't see as many, red candlesticks or outflows right here than you would typically see. So I don't think it's going to be an extended, downtrend per se, unless the news does start to come out on a more regular, frequent basis every day, like the past 2 days. Then we could obviously keep going down more. So I wouldn't go as far as to say we couldn't keep going down, but I don't think we will go down to about 45 or lower, just because of this move, and our consolidation levels are so strong. Once we hit $42.69, we instantly bounce back up to the mid 70s. So I guess it really comes down to your position. If you're averaged in really high around 100 or 150, 160, 170, then I would probably average down at this point. It never hurts to wait a little bit, but right now you'd get a pretty good average down, being that we're only at $63 or $65 on the Robinhood. We also do have short data for the Grayscale Ethereum Classic Trust ETF that did come in only for April 30th, which is quite disappointing. I figured that they would make up for the lost time, because they right now are overdue to even report for the last 15 days. So I would expect that to come out any time now, or in an additional 15 days. So there's obviously a lot of short action going on in this ETF that they probably can't even keep track of it. Now, this was last updated April 30th, and it was at 3.42 million. If we come down here, the price on the report date was $30.81. If we come over here to April 30th on Robinhood and actually look at the chart, this is right before we started to go through a massive rally. So I do think a lot of this was a short squeeze already, but I do expect the short interest to come in much higher than this in the next report that we do get, just for the simple fact of more shorts are willing to short this on the way down back to this previous level that some shorts had started to cover their positions, just because there's still a almost 100% downside from our April 30th price. So I do expect the data to come in higher next time, but we will have to wait and see for that information. But it is good that they updated at least something, because I'm sure they started to get a lot of emails from a lot of different people, including myself, and it's just good to see that they did that. But I do expect it to come in higher next time around. That's all for this video. If you guys got anything useful out of it, hit that like button for me, as well as subscribe to the channel and turn on the notification bell if you want to stay up to date with these videos as soon as they are posted, as well as check out the links down below in the description where you can check out the Patreon, see if that's something that fits you and your personal needs, as well as get your $5 free in whatever stock you want. 2-minute sign up, no deposit necessary, get your free stock immediately. So with that being said, be safe in the crypto markets. It can get quite volatile right here, and always be prepared, not scared. Until next time, take care.